Hi, my name is Nurul Ain binti Indra Marwadinata and I will be presenting about key risks facing Spritzer. First, under operational risk, the company is vulnerable to raw water supply risks. Since water is the core resource, any disruptions in supply due to environmental issues or regulatory changes can significantly impact operations. Additionally, disruptions in the supply chain, especially for bottling and packaging materials, can halt or delay production. Next is the financial risk. Spritzer may face liquidity risk, especially when balancing large capital investments with cash flow requirements. There is also exposure to foreign exchange volatility, particularly as the company expands regionally and deals with international suppliers or partners. Lastly, in terms of market and customer risk, Spritzer operates in a highly competitive market. With many local and international players offering similar products, the company is constantly under pressure to maintain its market share and brand loyalty. Moving on to the Swot analysis. Starting with strength, Spritzer is a market leader in Malaysia with over 40% market share. It also benefits from strong financial stability and ongoing sustainability initiatives, which align well with today's consumer values. In terms of weaknesses, the company is heavily reliant on the Malaysian market, making it vulnerable to local economic and policy changes. Additionally, high capital spending on infrastructure and operations limits flexibility and agility. As for opportunities, there is a growing trend in health-conscious consumer behavior, which boosts demand for bottled water and functional drinks. Furthermore, Spritzer has strong potential for regional expansion into Asian countries, China, and the Middle East. However, there are threats. The company faces rising raw material costs, particularly for plastic and packaging. It must also navigate stricter environmental regulations, which could affect both operations and costs if not managed properly. Thank you.
Hi, I'm Noor binti Maruf. I will briefly explain about the company, the importance of risk management, and the current supply chain challenges that are faced. Spritzer was established in 1998. It provides natural mineral water. The company we choose is in the water and beverage industry. The source is from the rainforest site in the Taiping, Perak. Spritzer maintains environmental sustainability by introducing the recycle of the plastic bottle. The company also provides other products such as non-carbonate fruit-flavored drinks. The importance of risk management. Number 1, resource security. Natural mineral water is the raw material for Spritzer, which depend on the rainforest site. Any pollution, draining, and regulatory restriction will pose a significant risk. Number 2, regulatory compliance. The product needs to have halal certification under Islamic law, which require the entire production process to fulfill the halal standard from water source to bottling. Without halal certification, the company will face market risk because the product may be banned from any shelf in the market. Number 3, supply chain disruption, pandemic or geopolitical tension cause delay in production and distribution. The company needs to follow safety law to ensure that the products are safe for consumer and the distribution process itself is safe. The current supply chain challenge. Number 1, raw material shortage. Spritzer had to compete with other companies for the thermoplastic polymer. When the demand for the PET plastic is increased, the price of the packaging material will also increase, which causes shortage because the demand for the PET plastic more than the available supply. This will drive production costs. Number 2, logistics and transportation delay. Due to the COVID-19 pandemic shutdown, Spritzer faced a shortage of shipping container and rising fuel costs. It caused a delay in the shipping timeline and shortage of the product in the market. Number 3, labor shortage. Malaysia has to close its borders due to the COVID-19, caused limited local and foreign worker availability. With few workers, it will slow down bottling and packaging operations.
Hi, Assalamualaikum. My name is Noor Amira Afrina binti Badru Hisam, and today I'll be presenting a SWOT analysis for Spritzer Berhad. SWOT stands for strengths, weaknesses, opportunities, and threats. It is a strategic tool that helps organizations identify their internal strengths and weaknesses, as well as external opportunities and threats. By understanding these 4 factors, company can build on what they want to do well, address what they like, seize growth opportunities, and prepare for potential risks. In this presentation, I will focus on the first Spritzer strengths and weaknesses, which are internal factors that directly affect the company's supply chain's resilience and overall performance. Firstly, let's look at the Spritzer Berhad key strengths. Spritzer is the largest and the most integrated bottled water company in Malaysia, holding over 40% of the market share. This market leadership gives Spritzer strong bargaining power with the suppliers and distributors, which improve efficiency and control throughout the supply chain. Secondly, Spritzer owns and operates 3 bottling plants located in Perak, Johor and Selangor. As well as their own plastic packaging factory, this integrated supply chain reduces dependency on external suppliers, improve quality control and makes the supply chain more stable and responsive. Thirdly, the company's financial performance is solid. In 2023, the Spritzer recorded 490.7 million in revenue. That is a 30% increase from the previous year. With a net profit of 49.5 million, it is consistent dividend that payout shows strong internal financing capabilities, which means the company can manage operational challenges or invest in improvement without heavily relying on external funding. Another key strength is Spritzer's strong brand equity and loyal customer. For example, the company have received in Putra Brands Award Gold and the Reader's Digest Trusted Brands for 22 years in a row. This high brand trust means steady demands, better inventory planning, and the more stable supply chain operation even during market slowdowns. Moving on to the weaknesses. Next, I will highlight some internal weaknesses that could limit Spritzer performance. One major weakness that is limited international exposure. More than 90% of its sales come from the Malaysian market. This heavy reliance on the local economy makes Spritzer more vulnerable to domestic risks such as political instability, rising fuel prices, or local disruptions. Expanding regionally or globally could help reduce these risks. Secondly, Spritzer is heavily dependent on capital investment. In 2023 alone, the capital expenditure exceeded 59.8 million, mainly for new plants, properties, and production lines. While necessary for operations, this also means high costs for depreciation and less financial flexibility. It is also slowed down the company's ability to adopt new technologies quickly. Another weakness is its narrow product range. Spritzer mainly focus on water. This lack of diversification makes the company more exposed to the changes in consumer trends. Health campaign that can discourage bottled drinks or new regulation limiting plastic use, expanding into the beverage or products like functional drinks or water filtration system could reduce these risks. Last but not least, Spritzer presence in this fast-growing regional market is still minimal. Apart from the small operation in Guangzhou, China, the company has limited footprint in other Asian countries. This resides in its ability to spread economics risks and the benefits from the new growth markets. Without stronger cross-border operation, the supply chains remain more exposed to local challenges. In summary, Spritzer has strong market position, integrated operation, strong finances, trust brand, and sustainability initiative are key strengths that support a resilient supply chain. However, it is a limited international reach. High capital reliance, narrow product portfolio, and small regional presence are internal weaknesses that the company needs to address for long-term growth and risk management. Thank you.
Hi, my name is Nuri Sofia. Let's start with one of the biggest opportunities, the rising health awareness among Malaysians. More people are now choosing bottled water instead of sugary drinks. Spritzer is in a strong position because its mineral water comes from a protected underground source. This stable demand gives the company a predictable sale patterns, which really help in planning their production and distribution more efficiently. Next point is digitalization and automation. Spritzer has been investing in automation and digital tools. They use smart bottling system and digital inventory tracking. This speed up production, reduce labor cost, and improve accuracy. Real-time data also help the company forecast demand better and keep stock at healthy level, making their supply chain more agile and efficient. Next is global market expansion. Spritzer is also expanding internationally, especially into Asian countries, China and the Middle East. This move help them reduce dependency on the local market and grow their revenue. From a supply chain perspective, going global push them to improve logistics, manage cross-border inventory, and build a more resilient and flexible distribution network. Sustainability is another key opportunity. Spritzer now use 100% recycled plastic for their bottle and has adopted green manufacturing practice. This action not only help the environment but also attract eco-conscious customers and prepare the company for future regulation. It builds trust and strengthens long-term competitiveness. Lastly, Spritzer is leveraging e-commerce platforms like Shopee, Lazada, and their own website. This let them connect directly with customers and manage their inventory more efficiently. It also reduces reliance on third party and help them respond faster to changing customer demand, which is a big advantage in today's fast-moving market.
Now, I'll be sharing about some external trade that could affect Spritzer supply chain and overall operation. First, the cost of raw material, especially PET plastic, is a major concern. PET is made from petroleum, so its price follow global oil prices. When oil prices go up, so do Spritzer production costs. In 2023, we saw a 9.1% increase in their cost of sale due to this. Fuel price also affect delivery and logistic costs, adding even more pressure. This forced Spritzer to either absorb the cost or increase their selling price, both of which could reduce their competitiveness. Next is a high level of competition in the bottled water market. Spritzer faces strong competition from local brands like Cactus and Ice Mountain and premium international brands like Evian and Perrier. To stand out, Spritzer has to focus on strong branding, packaging, and being constantly available on shelf. Even small delay in the supply chain like warehouse or transport issue can lead to lost sales since customers can easily switch to other brands. Third, environmental regulations are becoming stricter, especially regarding plastic use and carbon footprint. Spritzer may have to adopt biodegradable material or new packaging designed to stay compliant. This could raise costs and slow down production if alternative materials are hard to get. So, maintaining compliance while keeping the supply chain fast and efficient is a bit challenging. Lastly, Spritzer is affected by global economic factor. They import raw material and machinery, so any drop in ringgit against the US dollar increase costs, inflation, interest rate, or sudden change in trade policy, especially in key markets like China and the Middle East, can also disrupt logistics and supply planning. This makes financial forecasting and long-term decision-making much harder for the company. In summary, this external threat required Spritzer to be more proactive and adaptable, especially in managing its supply chain operation efficiently.
Hey everyone, I'm Ikramina. Today, I'd like to share 5 strategy recommendations that can help Spritzer Berhad Malaysia, leading bottled water producer, build a more resilient and sustainable supply chain. First, diversity sources to reduce risk. Spritzer relies on critical inputs such as PET resin, bottle cap, and water treatment chemical. If this material come from only a handful of supply, any geopolitical conflict, export ban, or raw material shortage could halt production. By qualifying additional vendor in different regions, negotiation, backup contract, and maintaining safety stock, Spritzer can keep its line running even when one supplier is distracted. The company already operates 2 modern plants in Taipei and Yongping, equipping both sides with comparing machine and digital monitoring, which allow operation to shift quickly if either facility face a technical failure or a natural disaster. Second, deepen digitalization. Across the supply chain, Spritzer has taken an important first step with an award-winning automatic storage and retrieval system. Building on the success, the firm should install Internet of Things sensor to track inventory, temperature, and equipment health in real time. Artificial intelligence forecasting model can refine demand projection for festival peaks such as Chinese New Year, while digital twin simulation will let the manager test their response to hypothetical distraction before they occurs. Greater data visibility mean faster decision and lower cost. Third, tighten ESG governance and regulatory compliance. Spritzer is already aligned with the UN Sustainable Development Goal and Bursa Malaysia's sustainability guideline, but regulations are evolving fastly, especially around plastic waste. A dedication compliance unit can scan for new local and international rules, conduct regular ESG audit on supplier, and prepare for policies such as extended producer responsibility. Proactive governance shield the company from fine and reputation harm while ensuring customer that Spritzer's entire value chains meet high ethical and environment standard. Fourth, strengthen contingency planning. The enterprise risk management framework should be expanded to cover second and third tier suppliers so that hidden vulnerability are visible. Detailed playbook for scenario like pandemic, export restriction, sudden price spike need to be written, updated, and practiced through crisis simulation. Regular drill build muscle memory, ensuring cross-function team can act decisively when a real emergency strikes. Finally, lay in sustainable packing for long-term resilience. Spritzer new label-free, fully recyclable bottle already cut carbon emission up by to 70%. The next step is a pilot biodegradable material, invest in recycled content, resin, and partner with local council or NGO to improve collection and recycle rate. greener packaging, lower environment impact, mitigation future plastic level, and earn loyalty from eco-conscious consumer. By acting on these 5 recommendations, diversifying sources and end-to-end digitalization, boost ESG governance, comprehensive contingency planning, and continued innovation in sustainable packaging, Spritzer can protect its operation against short compliance with tighter regulation and reinforce in brand as Malaysia's most trusted and sustainable bottle company.
In conclusion, Spritzer has been in the bottled water and beverage industry for 3 decades. The importance of the risk management for resource security, regulatory compliance, and supply chain disruption will help the company improve the quality of its products. Spritzer's current supply chain challenges are raw material shortage, logistic and transportation delay, and labor shortage will affect production if no action taken. SWOT analysis will help us to understand the current stage of the business in the market and to develop a plan to move successfully. Therefore, our strategic recommendations are ensuring risk mitigation through diversified sourcing and operational redundancy. Next, embracing technology for transparency and supply chain efficiency. Then, strengthening regulatory compliance through ESG driving governance. Lastly, developing comprehensive contingency and risk management will improve operational sustainability and supply chain resilience. That's all from us. Thank you.